Good morning and welcome to 5 Before the Bell, TheStreet.com's daily market update and U.S. market preview right here from the heart of the financial district in central London and the Core TV studios. I'm Martin Bakkerdax. I'm the London Bureau Chief here at TheStreet.com. I'm going to take you through those 5 things you need to know before the bell. The stories are coming thick and fast today. I can't really keep up with everything. I am going to tell you right off the bat that there's been a major decision with respect to Uber's licensing here in London that I won't be able to get to at the moment, but we will have a separate video on it in a few moments' time, so please do bear with us. But Uber doesn't look likely to obtain a license to operate here in London, the most important market in Europe, and it is another hammer blow for the ride-sharing service as it seems to stagger from crisis to crisis. But let's get on with what's happening in Europe right now, because stocks have bleeded their way into the green today. It's been a bit of a surprise because we've had a mixed reaction in the post-Fed trading. Now, volumes are a little bit thin owing to the high Jewish holidays and the second day of celebrations for Rosh Hashanah, so that does tend to limit activity here in London and also in New York. But there's also been a little bit of edginess from investors with respect to the saber-rattling that we heard overnight in North Korea with respect to the potential launching of another missile, this one potentially weaponized with a hydrogen bomb that might be tested over the Pacific. That said, Asia stocks, they grinded a little bit higher, and the only reason that the Nikkei dipped the small amount that it did, and it was at a 2-year high, was because the yen was stronger on some safe haven trading. So the underlying score inside global equity markets is still very, very strong. It was buttressed today by some very good economic activity from the IHS market people. They do a private survey, the PMI Composite Index, which I'm sure you've heard of, which surveys around 7,000 businesses here in Europe. That notch clipped up to 56.7, the highest in about 4 months, and very close to a 5-year high. In fact, manufacturing, the pace in activity in that sector, very important for Europe, is hotting along at the fastest pace in 6.5 years. So it probably means very robust growth in the third quarter, and it's going to complicate the European Central Bank's thought process in the months ahead as it contemplates the way it's going to exit quantitative easing and the negative interest rate program that it has in place at the moment. Another big event today is UK Prime Minister Theresa May. She's going to be delivering a speech in Florence this afternoon that is meant to outline her government's new Brexit strategy. It's a bit of a reboot because the talks with Brussels have stalled so significantly. The report suggests she may offer paid access for the single market in a transition period in return for the beginning of trade talks that would define the two relationships after the countries decide to exit in, 2019, but then afterwards from 2021. Will it be enough to placate EU membership is one question. Will it be enough to tame the growling that seems to persist inside her own party, and the potential leadership challenge from one Boris Johnson is quite another. She's going to have to walk a very fine line at the moment, and really this is the speech of her political life. If she isn't able to satisfy both constituencies, we may have a new prime minister before Christmas. Big story today involves LOreal, the cosmetics giant, one of the biggest, in fact, the biggest in the world on a revenue basis. They sold $28 billion worth of cosmetics last year, but the heiress and the namesake of the company, Liliane Bettencourt, passed away yesterday in the suburbs of France, just 1 month shy of her 95th birthday. Her family has had a controlling share in L'Oreal for a very long time. She is the daughter of the founder of the company. However, she herself, in failing health in her final years, had been embroiled in controversy with other family members over allegations that Liliane was being manipulated by one of her closest friends, with whom she had donated, in fact, several $100 million worth of gifts at the end of her life. Now, this story is interesting on a number of instances. Firstly, Madame Bettencourt was considered to be the richest woman in the world with an estimated wealth of about 33 billion euros. She was also a staple in the French tabloid press, and her exploits and the anger that seemed to emanate from the relationship with her only daughter really gripped the French media and the French public for a number of years now. But from a corporate perspective, really the big score here is the fact that Nestlé has a 23% stake in L'Oreal and has had that for a number of years. They've described it as strategic, but many other people say that it simply doesn't fit the profile of the company going forward, and it doesn't fit the company's own seeming objectives. They're getting away from skincare, they're cutting R&D spending in some of the skin cream headquarters and divisions that they have amongst the company, and probably most importantly, one of its activist shareholders, Dan Loeb's Third Point hedge fund, has asked them to look at ways that they can get out of the L'Oreal stakehold because it simply doesn't fit in the portfolio. Now, the agreement that is in place between L'Oreal and Nestle means nothing can happen for about 6 months. But after that, all bets are off, and really anything could happen. L'Oreal could buy back the stake from Nestle. Nestle could sell it to the open market. L'Oreal could attract a takeover bid for itself. L'Oreal shares gained the most in about 4 or 5 years in trading before pairing gains, but they're still up about 3% on the day. And Nestle shares, that's a big stock. It doesn't move very easily. It was up almost 1% at one stage today as a result of these stories. Again, condolences to the family, of course, and we never want to really celebrate the death of someone in any way, shape, or form. But having said that, this is a story that has now been reignited as a result of the passing of Madame Bettencourt, again, just 1 month shy of her 95th birthday. Moving on to the United States, Facebook is a major story today. In point of fact, it has elicited a tweet from President Donald Trump only a few moments ago. Facebook has decided yesterday to hand over documentation and data related to about 3,000 political ads on its social media platform in the run-up to the elections last year. Congress has been looking at it and at various ways in which the Russian propagandists may have manipulated the election result, at least according to some allegations. The president has hit back, again, just a few moments ago, saying on Twitter that this Russia hoax continues. Now it's ads on Facebook. What about the totally biased and dishonest media coverage in favor of crooked Hillary, as he likes to refer to his campaign rival, Hillary Clinton? Now, this is a big story. It's a gigantic story because it looks at the ways in which social media affect the ways that we execute democracy. Really, I know that sounds high-minded, but it's absolutely true. Mark Zuckerberg only last year called the idea of swaying an election a crazy one and said it simply wasn't possible. Now he's handed over the data to Congress. There is a bit of a discussion now as to whether that data should be made public by congressional lawmakers or by Facebook itself. Facebook doesn't really want to do that because privacy is utmost in its business model. Once it starts handing that over, Pandora's box is open and you could see users fleeing the platform. But nonetheless, the fact that these ads can be placed so easily and so anonymously and have such a major impact on the way that we consume news is something that the House Intelligence Committee has been looking at for a number of months now. It is a big change in the thought process of Mr. Zuckerberg and certainly in the reputation of Facebook as a result of the activities during the campaign. But the fact that the president has hit back now probably only elevates it further into the news cycle and makes that tricky balance between lawmakers, Mr. Zuckerberg, and social media elsewhere, including Google and Twitter, that much more difficult. It is iPhone Day today across the world. The iPhone 8 went on sale for the first time in Asia and here in London today, in point of fact. Of course, this isn't the big one. The iPhone X is going to be available in stores in November, but nonetheless, this is a big product launch for the biggest company in the world. It's not really going that well, it has to be said. I've seen myriad photographs on social media platforms that are showing empty Apple stores this morning, and that's simply something you do not associate with a product launch from a company like Apple, who generates so much excitement into the run-up. So it has raised a lot of questions about the demand for the iPhone 8 and whether this split release, i.e. having the iPhone 8 come out now and the iPhone Anniversary Edition, we're calling it the X or the 10, I'm not exactly sure, coming out in November. It actually piles a lot more pressure on Apple as well because there's been all sorts of speculation that the iPhone X might be delayed owing to some production glitches and some component shortages. We don't know if these are true. It certainly seems to be circulating in the tech blogs, but nonetheless, if the iPhone pre-orders are underwhelming, and so far they do seem to have fallen shy of the iPhone 7, it would mean normally that people are waiting for the iPhone X. If it's not ready in November, that is going to upset the apple cart for Christmas sales. There's also been further pressure on Apple as a result of some bad reviews for the collection of tech gadgets that it has out going into the Christmas season, particularly the Apple Watch. All sorts of reports about it having connectivity issues, having battery issues, and just simply not being as whizzy as it was first advertised. Other people say, no, it's not true. It's absolutely an amazing device, and it's going to be the must-have. But point of fact is, Apple shares fell the most in more than a month yesterday, and they're marked about 0.5% down today. So the gloss is off. There's no question about that. And whether or not this launch can revitalize itself in the coming days and probably most importantly, collect enough momentum into November when the Apple iPhone X is ultimately released remains to be seen, and investors are going to be critical and cautious. And of course, as we noted yesterday, as U.S. bond yields rise, tech stocks too tend to decline. So Apple is going to be caught in that downward pressure as well. This is a stock that has to be paid attention to because of its weight on the S&P 500. So stay closely, watch to this story, and come back to thestreet.com because our tech team is going to be all over this. Now, talk about Wall Street. We are called a little bit lower at the moment, but not by much, it has to be said. Just a couple of points to the downside on all three major benchmarks. Certainly investors are going to be rattled as a result of what we were hearing overnight in North Korea and the potential testing of a hydrogen weaponized missile over the Pacific Ocean. We don't know if it's going to happen, but on past form, North Korea is certainly minded to do so, particularly after sanctions were increased only this week that include stopping of all financing activity from banks in China to the Rogue Kingdom. So the stakes are high, and certainly North Korea's past form suggests that we may get something over the weekend. The president is going to have to pay particular attention to this because it is intensifying on a daily basis. Now, the U.S. dollar has been on the back foot for much of the Asia and European session. I can't say that that's necessarily linked to any anticipation with what the Fed is going to do or not going to do, because it does seem to rise. It has fallen inversely to a slight rise in gold prices. So my anticipation is that this is more based on some safe haven flows than it is on any assumption of what the Fed is or isn't going to do. But again, I do mention the Rosh Hashanah holidays because that does mean that volumes are likely to be thinner than normal heading into the weekend, and that may give you asset price movement that isn't quite typical for the news flow and the data that you see behind it. So worth paying attention to today nonetheless, but what you see today may not exactly tell you what is going to happen heading into next week. Speaking of next week, that's it for us for this week. And myself, Martin Bakodax, London Bureau Chief here at thestreet.com. Thanks for watching 5 Before the Bell. Have a great weekend. We'll see you guys on Monday.